Hello, ABC Forex members. I've got a very important video, something that affects all of us today. We're living in some crazy times, and as we're watching the news and TV, we see what the COVID-19 virus is doing and impacting on all of our lives. And I just want to correlate with what's happening out there to our trading markets and how we're trading. And of course, I'm talking about volatility. So to better explain volatility, I want you to look at this this trending chart right over here. Okay, this chart here is of a normal trend. It actually is at a 45-degree angle, you can see, but with extreme volatility, okay, we get to see something like this. Okay, so as the market comes down here, and then extreme volatility, instead of like at 45-degree angle or less, it's actually going up this way. Okay, so that is almost close to 90%. So that's an uptrend. That would be a sign or an example of extreme volatility. Now, what about to the downside? Well, here, let's say price, instead of going higher, would be going down here again. Normal would be here, and 90-degree here. So this slope here, as price is coming down this way, you can see it's closer to 90 than it is to the 45. Here would be close to the 90 rather than the regular 45 or below the 45. So this is an extreme example of what we're seeing right now. So this important video is called Trading the Volatile Beast, and you'll soon understand why I'm describing volatility as a beast. Okay, so the very first thing that I do want to mention is that the beast will win. Now, during this unprecedented time of the COVID-19 virus, most FX traders will keep losing a lot more of their money. Okay, so that is a fact. As the virus grows exponentially within the human race, traders trying to capitalize on the current market's volatility will lose much of their trading capital at an alarming rate. Okay, now I'm going to explain exactly why I feel this way. Okay, so I'm going to look at some charts right now, and I'm going to explain volatility again a little bit better, and some of the problems I see as we're trying to make money in these markets. Okay, let's have a look at some of the currency charts and see what volatility is doing here. So this is the Euro USD, and again, you can see here the extreme volatility as prices come down again. Look at the angle or the slope. Okay, so here again is 0-degree slope. Here is 90-degree slope. Okay, right? And in normal market conditions, the trend here, the trend would be like either here or lower. Okay, so that would be normal market conditions, and you can see right here the extreme slope of price as you see it, and it is closer to 90-degree than the 45. Okay, so that would be explaining in a visual sense the volatility that you see. Now, another way to look at volatility is, let me just expand this right there, okay, and take a look. This is the ATR line. So basically all along the ATR was pretty even, and the ATR shows you at any particular candle here what the pip movement is, or the amount of pips a candle has moved on a specific day, and averaging out over the last 14 days. So this is a 14 moving average ATR. And again, if I was to put my mouse right there, okay, then you can see I'm reading the ATR value from the side to my left side, which is the data window, and it shows 184 pips, right? Now, another way Way to read the volatility is by the slope, the change of the slope of this line. You can see it basically was going horizontal. Now it's going straight up. You can see right here, I put my mouse right here and take a look at the bottom, ATR 14. It shows 181 pips. So that's another way, is just to expand this ATR window and just read the ATR number here. It shows 181 pips. Okay, so let's continue with really quickly with some of the other charts, and this is the Australian USD. Okay, so you can see here again extreme volatility, 1, 2, 3, 4, 5, 6 days of black candles all the way down, and it moved quite a bit. Again here, I'll put my mouse on the on this white bar here. It shows volatility, or the ATR, at 207 pips on the average over the last 14 days. Okay, the British pound USD, I'll put my mouse cursor there, and again you can see from the data window it shows 268 pips. Okay, so for on the average of the last 14 days, each candle each day moved approximately 268 pips. So you can see the volatility in the market. Okay, now again, let's take a look here. New Zealand, this one is at 185 pips. Okay, I want to go to the US CAD. Okay, wow, take a look at this, guys. I mean, 1, 2, 3, 4, basically 5, 6, 7, 8 candles all the way up. A couple of small black candles, but no real retracements, just kind of a pause in the market. So when you see a black candle, it's kind of just a pause in the market, and then the trend resumes again. Again, if I was to put my mouse there, this shows 227 pips. Again, and some of the currency pairs are really volatile, a lot more than the major currency. So here you can see the British pound, Japanese yen, GJ, and I put my mouse on that, and look at that, guys. The ATR is 336 pips. That means on the average each day over the last 14 days, the daily movement was well over 300 pips. So what does this mean? Well, it means that you can make a lot of money if you're on the right side of the trend. Okay, and in this case, if you picked if you were choosing to take sell trades, you would have been correct. You would have been making quite a bit of money. And again, I just want to show you something here. Getting in right here with our system, the ABC Forex system, right? We have the early trend right over here. Okay, if you would have gotten in there and stayed with the trend, 1,764 pips is the middle number I'm looking at. Okay, so again, 1,764. That means that if you would have traded with a $10 one standard lot, you would have made $17,000 over just the last 2 weeks. Now, most of us are not going to trade with a standard lot, but how about 2 mini lots? So that would have still been over $3,000 worth of profits for you guys, just with, let's say, 3 mini lots. Okay, even if you don't have that much money, let's say you only have a couple of $100 in the account, then again, let's say you trade with two micro lots. So again, that movement here from here, 1,553 pips. So you're looking at about $300 in 2 weeks. So pretty good, even if you have very little money. And again, that's only if you're on the right side of the trend. Again, we call volatility a beast because most people will want to trade maybe reversals, okay, and maybe even take the wrong side, which is buy trades, and that's how you're going to be slayed by the beast. Now, I did want to show you one more pair, guys. This is the Euro Audi, and again, you can see the extreme volatility. This would have been one of your best pairs to trade. Put my my mouse right over there, and guess what? I'm reading from my data window on the left side. I'm reading 566 pips. So again, on the average, every single day it moved 566 pips over the last 14 days. Wow. Imagine getting in here. Imagine getting in right there, guys. anywhere, and you would have made a lot of money. Now, often with extreme volatility, we don't know what's going to happen, right? You can't predict. So I've got some very important issues to talk to you about. Okay, let's make some sense out of the volatility, okay? Now, remember, markets around the world are crashing. People are losing their money. I mean, the equity markets are just being devastated, right? But Forex is a lot different, guys, okay? Forex is different than the equity markets. Stocks and equities go down, 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 and they can actually become worthless. Forex, price can go up and up and up, and you can make money, and with Forex, with the currency pairs, price can go down and down and down, and you can make tremendous money when the currency pairs do go down, unlike the stock market. So just keep that in mind, okay? And that's why a lot of people today are trading Forex over the equity markets. Equity markets, when stocks go down, you really don't have any control. With the currency pairs, when the price of the currency pair is moving down, you certainly have a lot of control, and you can decide still on how much money you want to make. So, trading the Forex markets, the only way you can survive the volatile markets, and if you want to continue trading, is to understand the big difference between emotion and logic. Now, emotions versus logic. The next time you want to trade, ask yourself, are you trading with your emotions or are you trading with logic? There's a huge difference in how it impacts your trading. Emotional trading will make you trade out of greed, okay? So you say to yourself when greed is involved, well, I want to take advantage of all the volatility, okay? I want to take advantage of all the volatility to make as much money as possible right now. And that is when greed overtakes your emotions, okay? FOMO, what is FOMO? Fear of missing out. Emotional trading will make you trade from FOMO, as you say to yourself, well, I'm afraid of missing out, so I need to trade right now to capitalize on the volatile markets. See, this is what volatility does. It also affects your trading decisions, and most likely you're going to be wrong, and you're going to allow your emotions to trade for you, which is when you start losing money, okay? Now, let's talk about fact or fiction. Trade fact only. Trade what you see, not what you feel, believe, hope, or wish for. You can only react to what is happening for real. This is the fact. You can't predict anything. So the fact is right now, some currency pairs, you see 5, 6, 7 candles in a row going one direction. And so what that means is when it's up, when the trend is up, it means it's up. It's going up. Don't trade reversals. When you see price going down and you see the black bearish candles, it's going down. So that means you only want to trade, you only want to take sell trades. Don't take reversals to the buy side. That's what we mean. Trade the fact only, trade what you see. Tops and bottoms. Never guess the top or bottoms, even when you see 5, 6, or 7 more candles in the same direction. In a strong volatile markets, there is no support or resistance. Past levels belong to the past. Now's the time to practice. When there are no trade setups, practice, and then practice some more. Do some trade simulations. Don't worry, there's always another trade tomorrow or next week. The volatility beast. For many of you traders, the volatility beast will slay you. That's for sure. You can decide on volatility to either be the beast or your friend, okay? Ask for help. If you need any type of help or advice, contact your mentor, teacher, or coach. I appreciate your emails, and I'll always try to help you in case you're panicking or you're wondering what to do next. A good coach will always advise caution first. Stay safe. Always stay safe. Listen to your health authorities regarding your personal and family safety. Now, this is logical. Believe in yourself, guys. Let's make 2020 your best trading year ever. Believe this always. Take care. We'll see you in the next video.